This LOS is describe the objective of financial statements and the importance of financial reporting standards in security analysis and valuation. Before we get into this LOS, a quick study tip for this reading, which is Financial Reporting Standards. This reading is a perfect example of the CFA Level 1 exam being an English test, subject in this case being accounting. In review sessions that I have done, most candidates realize that this is one reading where they need to go back and memorize many lists using mnemonics. There's lots of memorization to be done in this reading. So there's a lot of keywords, principles, assumptions, characteristics, qualities, factors, etc. And there's a lot of subtleties between the concepts. And everything sounds really good, but you need to be very precise in terms of your memorization. The objective of financial reporting. The financial reports of a company include financial statements and other supplemental disclosures necessary to assess a company's financial position and periodic financial performance. Financial reporting is based on a simple premise. The International Accounting Standards Boards, the IASB, which sets financial reporting standards that have been adopted in many countries, expressed it as follows in its Conceptual Framework for Financial Reporting 2010. The objective of general-purpose financial reporting is to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, and other creditors in making decisions about providing resources to the entity. Those decisions involve buying, selling, or holding equity and debt instruments, and providing or settling loans and other forms of credit. Standards are developed in accordance with a framework, so it is useful to have an agreed upon framework to guide the development of standards. The Joint Conceptual Framework Project of the International Accounting Standards Board and the U.S. Financial Accounting Standards Board, the FASB, aims to develop a common foundation for standards. Standards based on this foundation should be principle-based, internally consistent, and converged. The IASB and FASB have developed similar financial reporting frameworks which specify the overall objective and qualities of information to be provided. Financial reports are intended to provide information to many users, including investors, creditors, employees, customers, and others. As a result of this multi-purpose nature, financial reports are not designed solely with asset valuation in mind. However, financial reports provide important inputs into the process of valuing a company or the securities a company issues. Understanding the financial reporting framework, including how and when judgments and estimates can affect the numbers reported, enables an analyst to evaluate the information reported and to use the information appropriately when assessing a company's financial performance. And that's the last slide for this LOS. Thank you.